Are you thinking of buying a home? Think again. Be careful. I want to talk today about real estate, and I'm going to go over 4 main things, and I'm going to go over them fairly quickly and just summarize what I've seen, because I saw an article recently that really ticked me off. It's my opinion that there's a narrative out there trying to say that the housing market is fine, prices are just great, and you should go buy a home. I disagree with that. I got to say, this is not financial advice. It's my personal opinion. 3 days a week I put on this show. We go over interest rates on credit cards, personal loans, cars, mortgages, and we talk about getting out of debt. Every Friday we talk about assets and how to preserve your wealth because the dollar's losing value. I always say the government does not care about you. Banks don't care about you. And now let me add something else. Be weary of everything that you read. Question everything you read and the motives behind it and the people behind it, because it seems like these days you can't really trust anything and you've got to dig into the facts for yourself. Let me start by talking about 3 things, and I'm going to dig into real estate. We'll go over 4 things, and the 4th thing you're going to want to hear. The 3 things I wanted to discuss first is, 1, let me give you an example of years ago when I purchased a home in a neighborhood. And it was around $500,000 or $600,000. And this was quite a while ago, almost 20 years ago. And in that neighborhood, they continued to build homes. And by the time they got to the back of the neighborhood, the homes were over $1 million. Wow, that was great for me, right? The people in the back of the neighborhood paid over $1 million for their houses. Then, 2008 happened. There was a real estate crash. Prices came down. The houses in that neighborhood dropped to around $600,000. I was okay because the house price came down. Wish I had sold, but I didn't. But I wasn't what's called underwater, meaning I didn't owe more on the house than it was worth. There were some people in the neighborhood. I got to know many of them. There was a couple in the back, an elderly couple, and they were looking to retire. They were going to sell their home, move to another state, and retire. The crash happened. Now they had a house that they paid $1 million for that's now worth $600,000. What does that mean? Well, if you want to get rid of the house, you're going to declare bankruptcy. You're going to have to maybe short sell the house, or you're going to sell the house for $600,000. And when you go to settlement, you're going to take that $600,000 to pay off the mortgage on the house, which is maybe close to $1 million. Let's say they put $100,000 down. They owe $900,000. So they got to go to closing with the $600,000 from the sale, and then out of their pocket, they got to come up with $300,000. They have to pay $300,000 to sell their house. Okay, that happens. Over time, housing prices always go up, but they go above the norm line, and they go below the norm line. They go above and they go below. This happens all the time. It's my belief we're in another housing bubble. I follow many different YouTubers that go into great detail on real estate. They do a phenomenal job. I'm just going to go over some basics. The reason I wanted to talk about it is I just want you to be careful and look at certain things before you make a huge decision like buying a house. And I saw this article which really made me mad. It was from AOL. I'll show a picture of it here. And it basically says, maybe you and some friends should get together to buy a home. What are they suggesting? They're suggesting that you give up on the dream of owning a home yourself. You get a bunch of friends, you buy at the height of the market, let's keep housing prices up. I don't believe that. I think it's ridiculous. There was a time when people, maybe a family of 4, could survive on one income. One income. And they had a home and they had 2 cars. Now they're telling you, grab a bunch of friends or multiple families and buy a home together. We're in bad economic times. How about we don't all get together and buy homes, and instead the government stops spending so much money, driving us into debt, pushing up inflation, and putting us in a situation where our standard of living keeps going in the toilet. That's an alternative that I would prefer AOL puts in an article instead of telling you to grab a bunch of friends. And the 3rd thing is that I've seen from some of these YouTubers that builders who are building new homes are having trouble selling them. Mortgage rates are high. People can't afford them. There's all sorts of reasons. Now, what are they doing? In some cases, they are literally selling an entire neighborhood of homes. 200 homes, 100 homes, 300 homes. And they're selling them to whether it be a hedge fund or some sort of investment group. They turn around and they're renting out those houses. They no longer want you to be able to own a home. They want you to have to rent a home. Nothing wrong with renting. After my divorce, we sold our house. I rented. I put the money into my business. Happened to work out. I'm looking to buy. I'm not buying now. There's my situation. I may rent forever. I may not. Nothing wrong with it. Depends on your particular circumstances. But I don't believe I want to live in America where all the homes are owned by corporations and you have to rent. I don't like that. So that's the third thing that kind of ticked me off. So let's go over 4 things with respect to real estate at this moment. This is July of 2024. Look at this mortgage rate chart over time. What I realized was if you're 40 years old, that you were born in 1984. From 1984 to 1990, from birth to 16 years old, mortgage rates were somewhere between 10 and 12%. Okay. Then around 2000, you're 16 or 17, maybe you're starting to pay attention to finance stuff. They were around 8, but since then they've basically been below 7.5. They went down and down and down. So for your whole life, if you're around 40 years old or younger, rates were always under 7%, 5, 4, 3, and now they've climbed back up to 7.5. That is interesting to me because I didn't even put it into perspective of, good grief, most people 40 years old or younger have never seen these kind of rates. What does that really mean? Well, for a $420,000 house, and that's the median, we'll talk about that in a second, the median home price in America at the moment, $420,000. The mortgage rate at the moment is 7.5. That's roughly $3,000. And that's just principal and interest, not taking into account other things. If you were to be at a 4% mortgage rate instead of 7.5, it would be $2,000. The difference between $3,000 a month in a mortgage and $2,000 a month in a mortgage for the same house is significant. So mortgage rates are higher than probably you, if you're 40 and younger, have ever seen in your life. That makes a big difference. In one case, you're buying a house. In the other case, you're buying a house and maybe 2 cars. All right, that's the first thing. Mortgage rates are higher. They may come down. The Fed has said they may cut rates. I didn't think they would because they're trying to get inflation down. But then again, the U.S. government has to refinance a lot of the money that they borrowed, and now they need rates to come down. So chances are we might get a rate cut this year, next year. So that's mortgage rates. Keep an eye on those. It makes a huge difference in payments. Now take a look at this chart. The median sales price of a home in 2000 was $165,000. Why do I say 2000? Because if you're 40 years old, you were about 16. $165,000. Now $420,000. That is a significant increase in that period of time. So you're 40 years old and they're $420,000, the median, and at 16 they were just $165,000. These are higher prices than you've ever seen. Now, of course, that's the median. They can be much higher, much lower, depending upon where you are. Markets are localized. The third thing is that from what I've seen, housing inventory is going up. It's a supply and demand thing. Of course, we went through all of the COVID and the money printing, and we had supply shortages, and we had labor shortages, and we had a housing shortage. Interest rates were low. Housing prices went up. People aren't selling them unless they have to in some cases. But now, from what I've seen from a lot of these YouTubers that go into great detail, the inventory of homes is going up pretty substantially, pretty quick. Price cuts, there's more than ever. So that means housing prices might start coming down. I believe they will. When do I believe they will? Well, I read this book, and let me look here. It was, the name of the book is Secret Wealth Advantage. The author's last name is Patel. You can find that on Amazon. I got it. I think it's a great book. I'm not going to put a link to it. I'm not trying to make money on it. Just look up Secret Wealth Advantage on Amazon. Author Patel. It goes into his theory that there's an 18-year cycle. And that 18-year cycle, at the end of it, we're going to go into a steep decline, whether it be jobs, home prices, things like that. That next one is 2026. The last one was 2008. 2008 was 18. We got 2026. So it looks like potentially, if this is right, we could be looking at, and usually when housing prices go down, they can go down for a couple years, right? Or longer. We don't really know. My point is, look at these 4 factors. Keep them in the back of your mind. Your area may be localized, but don't believe everything you read, because there are narratives pushing you to go buy a house when it might be the case that housing prices are at a rate that you may not even see them this high in the next 10, 12 years if they start to come down, and mortgage rates are high. So before you go out and make the biggest purchase of your life, Be careful. Question everything. Make sure that you do what's in your best interest. Thank you for watching. Since this is July 3rd, I won't be doing a July 5th episode, which is where we help you preserve your wealth by turning dollars into assets. But we'll do this again Monday, and I do have more videos coming out with respect to credit cards, but more importantly, we have a bunch of calculators, and I'm going through every single one of them to show you how you can use them. Thank you. Have a great day. Happy 4th.